Good morning, guys. Boom or bust? What does October have in store for us? That's the big question today. And today we'll have a special guest with us to discuss just that. He's got some interesting macro views for us that will help us make better informed decisions. Remember, not financial advice, do your own research. All that we're trying to do is give you as much info so that you're as better prepared and as well prepared as you could possibly be. Okay, so let's have a recap of what was said yesterday. So, in short, the whole stream was about where do we draw the line for Bitcoin, big or large time frame. And as I explained to you guys, that this $119,000 level is an exceptionally important level for us. It's our pivotal support level, it's our thou shall not cross level. And the concern with Bitcoin making considerably lower highs each time with each breakout now is that if we start losing momentum, that dreaded bear market or that dreaded kangaroo market, let's first just think kangaroo before we say bear, the dreaded kangaroo market could appear. And we also explained that this could be a positive thing, because that means that the dominance could turn into our favor, because the dominance up till now was still exceptionally bullish. Let me just bring that over. It was still exceptionally bullish, and a Bitcoin slowing down and alts heating up, and even the crazies, the small little alts, start heating up, could see the dominance finally giving us a bearish trend. Okay. And then we closed this all down with one critical level, which was the $119,000 level for you guys. And we explained to you guys that from yesterday, Bitcoin should go make a lower low, with the lower low being that I wanted to see strong bullish divergence. So you see that the RSI didn't make a lower low. So everything played out according to plan. And currently we're sitting at 120,800 as support. Subsequently, I have taken a long at that level. So I'm currently sitting in about $1,800 worth of profit. Nothing too crazy. Now I'm running out of screens here. There we go. Oops. $1,800 worth of $1,000 worth of profit. So I went long there. And this is off the back of the previous trades that we've been taking. The trades, like if I show the trading history, the previous longs that we took at around 108,000 all the way, those longs. And I'm still carrying my dreaded one Bitcoin short. So I'm still carrying that bugger. So I'm hoping as well that there's going to be some sort of a relaxation. We were there, man. I was almost breaking out. Even I was thinking maybe I should just close it. But then stubborn me said, large time frame, play the game, stop putting emotions into it. Okay, so now everybody is up to date of where we are with Bitcoin, where we are with the dominance, and what was said on the YouTube yesterday. So the recap line can now move on to where we are today. So in short, from my play, I'm thinking moon. Obviously, we all want to think moon, but we have to be common sense. And the goal is to successful trading is not having your analysis play out and make money, but is even if your analysis fails, you end up still making money, which means that you have to have a contrarian view, you have to have an opposing view, and you have to be open to possibilities or other possibilities so that you can do thorough, proper risk management. Okay, so before we bring up our guest, real quick, guys, today's stream is brought to you by Prime XBT. And if you guys want to join in on the Prime XBT giveaway that I'm sharing today, all you need to do is head over to the Discord, go to the navigation channel, and click on the Prime XBT giveaway button there. It's going to ask you whether you've opened your Prime XBT account using the link below. Okay. And if you've done that, it's going to ask you just to enter. So all you need to do is you just click on this little enter button. What it will do is we'll open a one-on-one chat channel. And within that chat channel, all you need to do to qualify for the $50 prize giving today is just send your user ID, whatever the digits will be. Just send it in, user ID, and then we can have a look at that and give that prize, those prizes away at the end of the stream. So make sure to do that. Over to the comments. Stanku, good morning to you, my friend. Renee, here as always, go get your $50, guys. Get your accounts in so that you can get your $50. Dean, maybe you're the lucky winner today. Dean does sound like a nice lucky name today. So maybe Dean will be the guy winning the $50. Well, one of the guys winning $50 today. Compliments of Prime XBT. Okay, so now all this said and done, let's bring up our guest. Jonathan, how are you doing, my friend?
I'm doing good. Thank you, Rudo, for having me. It's a pleasure. And hello, everyone on the channel's first time being here. So very excited to be here and do some technical analysis and perhaps put in a couple of live trades while we're at it as
Why
well.
not? Why not? Jonathan, real quick, give the viewers a little bit of background. How did you get into trading?
Right. Okay. So how did I get into trading? Wow. Yeah, it's quite a long time ago, almost 10 years now. I got into I started with crypto, got into Bitcoin, and I remember, actually I was mining Bitcoin back in 2012 or something like that. Made a couple of hundreds of Bitcoin. Didn't really think it was worth much at the time. Printed out a paper wallet. Put that paper wallet somewhere, forgot about it, and now it's gone. That's the story. A lot of people have that story,
right? People got that story.
Yeah. But no, so back in 2016, 17, I got back into the market. I looked at the Bitcoin chart. A coworker of mine said, like, oh, have you seen Ethereum, right? And I'm like, what's Ethereum? And he's like, well, it's kind of like Bitcoin, but something else. It's an altcoin. I'm like, oh, that's interesting. So yeah, I bought some Bitcoin in beginning of 2017. Got into the crazy bull run back then with the altcoin season and everything. And yeah, I was hooked. I was hooked on the crypto market and seeing that insane volatility and the fluctuating P&L is going up and down. Made a lot of money on unrealized profit, and then lost it all in the crash. And then I decided, I'm going to get into, I'm going to learn this. I'm going to actually study this and learn this and study technical analysis. And I've been, studying technical analysis now for about nine years or so. And yeah, I'm now trading full time and working as a market analyst full time and trading full time here at Prime XBT. And I've been working for Prime XBT for almost a year now as well. So yeah, it's predominantly focused on the Forex market. But I love crypto. I love Bitcoin. It's close to my heart. But the money for me is being made in Forex. But long term, I'm definitely more interested in the potential of the crypto markets, I would say.
Yeah, the degens do live in the crypto side of things. I do find myself, looking at silver right now. That thing is just yesterday I was calling a silver long in the Discord. And where was that long? Let me quickly show in the Discord. So I was trying to get in on that silver long, and the market just basically ran away from me. So we were trying to get in on silver yesterday, and it never went to entry. And if you look at where silver is right now, it's sitting at 50.6. We were trying to get in there. So frustratingly so, that side of the market is doing really well. Gold gold is just, I was asking a simple question. How do you chart, Jonathan? Maybe you can answer me. How do you chart the straight line? How do you chart that?
So well, I think yeah. Gold is gold is difficult from a technical point of view now because it's really running a lot of fundamentals. We have that debasement trade. The debasement of currency, devaluation of currencies, and it's actually quite interesting because you had the conflict between Ukraine and the war, Ukraine-Russia war. When that started, people started asking, what is money? Because you saw that a lot of Russians' foreign assets were getting frozen. So institutions and countries, central banks, they started asking, what is money? And if it's that easy to freeze assets, maybe we need to start looking at another alternative, right? And if you look at the gold chart, you'll see that the when we at the time of that. I think that was in about 2 years ago or something like that. We had the or was that in I can't remember when the war broke out, but it was somewhere within this range right here, right? And at that time, what we saw was a huge accumulation of countries, central banks, institutions accumulating gold, and it really caused a huge move and a huge run up on gold. What we're seeing right now, if we're looking at ETFs and the inflows into the gold market, we are basically seeing most of this run seems to be, at least at this point, driven by retail demand. So we got the smart money has probably already accumulated. Now we're seeing that potential last leg of the run, but it depends on how the macro environment develops. This debasement or this devaluation of currencies that we're seeing with the USD and the possible threat to Fed independence in the US, I mean, this could potentially run, right? And so the way that's the macro backdrop when I'm looking at gold, and it's very much fueled by an insane demand from retails and big institutions and central banks. I think right now we have like I think central banks, they hold like over $1 trillion worth of gold, and they've been accumulating quite a lot. I think the accumulation that we saw recently is the biggest in like 3 decades, or at least the last 5 years or so. So if we're looking at the higher timeframes for gold, I mean, if we go out to the weekly, yeah, like what you're saying is basically just a straight line to the upside. But I think it's important to understand that from a technical point of view, whatever happens on the higher timeframes is always going to first show up on the lower timeframes. So what I do on gold, you could look at things like, I love the 4-hour time frame. It's a good mix between the lower timeframes and the daily.
It's my swing trading time frame. I like to swing trade the 4-hour.
Yeah, exactly. Same here. I'm predominantly a swing trader, so I make my plans on the weekly and the daily, and then I try to find my entries based on the 4-hour.
Yeah.
So looking at gold right here, we can definitely see that we had a big move to downside yesterday. Obviously, a big dump to the downside here yesterday. We can add simple moving averages like the 4-hour, 20, and 50 EMA. We got the 20 EMA here on the 4-hour is the white. The blue one is the 50 EMA. You can see on this run to the upside that prices on consolidations or bigger moves to the downside, we do not tend to come lower than the 50 EMA and the 4-hour. And by just drawing a simple trend line here on the 4-hour, we do see that price is relatively strong. We're still in an uptrend. And if we look at the local dips on gold, you never really come down and test the low Fibonacci retracement levels, right? I like watching the 0.618 for a deep retracement on any asset. But in a very strong bull market, and you know this as well, when you're looking at gold, for example, like you're looking at gold, when gold's breaking out and you're trying to catch a retrace, even looking at the 50% might be too low. And what we're getting for gold right here is we're coming down and we're testing a low time frame support right here. Now, we have to admit as well, it might turn into some type of head and shoulders. If you look at that as the left one, the head, the right one, I mean, you could potentially see something like that. The chances of that happening with the current environment, I don't think it's very likely. You now have a double bottom on the 1-hour. You're hitting support. Will gold drop lower? Well, if gold drops lower, let's say down to 3,880, we have the first sign of a potential shift in market structure, especially if price goes up here and starts moving down, because then we have lower highs and lower lows. But it's really the level here that I'm looking at. If that one breaks, potentially going to see a deeper retrace on gold. And what levels are we looking at? I mean, I know a lot of people are going to be looking at the high time frame breakout area down here. I don't think we're going to hit that level unless we see a major shift in the fundamental themes that have been driving gold. And I don't see that changing in the near term future. So I'm currently long on gold, and I'm liking gold here for the next for the foreseeable future. And even if this 4-hour trend breaks, I'm looking at the daily trend. And the last minor low we had on the daily trend is at 3,819. So we have a lot of room to the downside for this trend to be very much alive. So how do you chart a straight line? Simple question, simple answer. You go into the lower time frames because it's always on the lower time frames where the shifts of market structure will present themselves and then translate over into the higher time frames. But then again, depends on who you are as a trader, investor. What's your investment horizon? Are you looking at investing in gold for the next 2 years? Then you don't go lower than the daily. Then the daily
is almost too big, too small as well, too zoomed in.
Yeah, in some cases, definitely. But I mean, the problem with analyzing gold on the weekly is just, especially if you go to, like, if you're on the arithmetic scale, it's just, from a technical point of view, like long term, the reason I'm investing in gold long term is because of the underlying factors that is driving the demand for gold. And I think, it's also the same parts of the underlying foundations that is driving Bitcoin, because I think right now a lot of people are looking at an alternative to the dollar, right? And also a safe haven asset, and that's obviously one of the best ones is gold. But if 100% of capital is flowing into gold, some percentage of that capital is most likely going to spill over into Bitcoin, because we see that more and more institutions, and if you look at ETF inflows, more and more people are seeking refuge and safe haven in Bitcoin as well. And that's why I think we're seeing the bullish. Well, I guess it's not super bullish right now on Bitcoin, but if you look at Bitcoin on the higher time frames, there's no denying that this is an insanely bullish chart. So it's interesting because I think that the basement trade that we're seeing in gold is spilling over into Bitcoin and the crypto market. But Bitcoin and the crypto market is also fueled by the same foundational principles that is driving the stock market right now, the equities market. So Bitcoin. Yeah, go ahead.
No, I was actually looking in at that, because that the argument that you're stating now with gold and what's happening with Bitcoin, we're seeing in the stock market side that they call it their penny stocks. Those have been flatlining for years, and funny enough, they're breaking out. So they're getting their version, the TradFi version of an alt season at the moment. So it's a really positive sign, because what is happening is now that all the money has been made. So it's the same cycle as we used to have. Bitcoin, their version, gold, has been doing so well that those guys are now looking at diversifying and buying the risky small stuff. And they're actually breaking out at this stage. So that makes for a really quite interesting argument that you've got, and maybe supports the theory. And we've now seen this play out with Bitcoin and alt season. Bitcoin goes ballistic, we need that, and then from that, the success that gets generated from that spills over into the alts and start cycling. So it could be that we see a longer term uptick. So your longer term projection for gold, I mean, statistically, we have data that points that there should be at least 12 more months of upside. So it could be that is going to be the case. So we'll take it as it goes, level by level, but it makes for an interesting point.
Yeah, I think, trying to time this is, I think trying to time the market is, so there's this saying called time in the market beats timing the market. So
I like it. I've never heard that one before.
If you're a long-term investor, right? What's the best way to, like, the average people, what's the best way to make money as an average people, or as an average guy? Take your money, put it into an index fund, stay in the market for as long as possible. You will most likely outperform 99% of all the traders out there. 97% of all the traders out there, they lose money. But if you put your money into an index fund, and then when you have that money in that index fund, you actually learn how to trade. So you make money while you learn how to trade at the same time. And then when you can prove to yourself that you're actually profitable as a trader, you take the money, you put in the trading account. Most people, they start the other way around. They start by trading first without really understanding the basics. And a point on that is at Prime XPT, what I'm doing right now, what we're doing at the team, we're heavily focused on trading education. We're building we're building materials and educational content for our traders to really try to help them make money in the markets, and utilizing the educational content, the materials that we have with the platform, with some of the best trading conditions in the industry, to really excel themselves in this space. Because I think that's something that's really lacking in this industry, is quality content on how to actually trade.
Everybody wants that, and the reality is and this is what happened with me. You know, I started trading spot. I got into crypto because of a scam coin, and funny enough, smelled there was something fishy, pulled out. But then the idea of trading kind of stuck with me, and I nearly quit trading because I started trading leverage too soon. Because at some stage I was making money on spot, being in the market, the accounts are growing, things are doing well. Maybe I've got this. And then I moved everything into a leverage account and nearly wrecked myself, and nearly thought, okay, well, this is nonsense. I need to then back off. And knowing when to trade leverage and knowing how to trade leverage responsibly is always been our channel's motto. You know, so we've always been trying to not overtrade, not do anything like that. So everybody in the comments, real quick, give me a 777 in the chat, just for the hell of it. Let's just see if everybody's there. Henry, Erica, only Alex as well. Only Alex says that you're his mentor, buddy. So I think only Alex has followed you over from wherever your channels are going. So
yeah, I see Henry as well. Henry's a I recognize Henry. We got Alex. Alex is a good friend of mine. I would consider him being my mentor as well. So we got a lot of
welcome, guys. Welcome.
Awesome. Good to have you guys in here.
Cool.
You talked about
319 people joining in live at the moment, guys. Make sure to like, hit the subscribe, retweet wherever you're watching in there. Share the love, and yeah. And Jonathan, what do you want to share for us?
Well, we got 3 winners. We're doing a giveaway today, right? We're doing we got $50 of a trading bonus to 3 people. So what is it? I think what we came up with is the people that have the best questions, the 3 people that have the best questions in today's live stream will be selected to win a $50 bonus on Prime XPT. It's going to be deposited into your account. And I believe the giveaway is going to be happening on your side, right? You're going to be
the Discord.
Taking
so
care
all you
of that.
need to do, as a reminder for guys, just head over to the Discord, click on the Prime XPT button giveaway. Let me just go back there. So head over to the Discord, click on the Prime XPT button. There you go, and then a ticket, one-on-one ticket, will be made open, and then the voucher code for those winners will be shared in there. Okay, then let's get back to your charts. You're the guy today, buddy. So I saw you had a few other macro charts earlier there. So what can we add onto Bitcoin? Because we've now looked at gold. We've seen where you are with gold, and we basically steered the conversation that we see a potential same thing for Bitcoin. So at one stage you had the argument that 150 or 100. So where you at regarding that?
So we can look at, if we look at the higher time frames for Bitcoin, this is obviously, we're looking at the weekly right here. We have a very clear structure of higher highs and higher lows. If we go to the log scale, this is a logarithmic scale. I'm also going to add an indicator called the logarithmic regression chart. So this is called right here. We got the Bitcoin logarithmic regression chart. Now, this is something that I've been watching for some time. Let me just add that back. This is something that I've been looking at for quite some time. And basically what we're seeing here is a logarithmic regression indicator. And the idea here is that we have a bull market support at the green bands and then potential bull market resistance or the beginning of a potential bear market at the top. Now, the idea here is that I've seen this chart been thrown a lot around a lot on Twitter as well. But the problem here is that a lot of people are focused on the 4-year cycle for Bitcoin, where you're getting explosive moves and it goes in cycles where you have a very strong bullish run to the upside, you have a sharp correction at the top and a prolonged bear market going into accumulation, and basically a perfect distribution between accumulation phases, public participation phase, and then the distribution down back into bear market and accumulation. That's based on the 4-year cycle. But the 4-year cycle was created in a time, and the environment for a 4-year cycle was created in a time when you only really had retail investors investing in Bitcoin. There were no investments vehicle back in 2017 where institutions could inject a lot of liquidity into the Bitcoin market. But that's what we're seeing right now. So Bitcoin is, I believe, shifting from a retail-driven hype cycle into a institutional liquidity asset that does move with based on macro variables like interest rates. You got the dollar, and right now the basement currency trade, and of course risk sentiment as always. And we're seeing, huge amount of institutional investment coming into the market, and that I believe is going to create smoother, shorter cycles with less extreme drawdowns. And we also see, from a policy standpoint, we got the US kind of adopting Bitcoin in a way, and they're creating regulations for stable coins, which makes it easier for people in emerging countries to hold the dollar without actually having to buy a dollar. They can buy a cryptocurrency stable coin pegged to the dollar. Now, all of this combined is creating a completely new environment for Bitcoin. And you have, I believe, 2 different scenarios here. Either a stable currency that is going to trade more like the Forex market, or a super cycle that is going to trade more like what gold is doing right now. And if we do enter a new super cycle for Bitcoin, I do believe that this could be the last leg of this potential 4-year cycle before we start stabilize. And looking at the current environment in the macro environment right now, we're in this the Goldilocks environment where inflation is not too high, it's not too low. We got the interest rates coming down. We have an environment where it's favoring risk assets, right? The issue here is we got sticky inflation, which means inflation is somewhat elevated and it's not coming down as quickly as the Fed wants. But there are signs that there might be changes to how the Fed work around inflation. And I've seen discussions about not looking too much towards the 2% inflation target and maybe looking at 2.5 or 3% inflation target, which then means that this current sticky inflation environment might not be such a huge problem, but it might still be elevated enough to bring gold higher based on a debasement basement trade, and Goldilocks environment will stay active. So risk assets would rally. Now this favors Bitcoin both ways, based on a slightly higher inflation and softer liquidity, like quantitative easing and things like that. Yeah, and I think this will most likely bring the crypto market, and especially Bitcoin, much, much higher in, let's say, the next 6 to 12 months. But there are some dangers to this, right? If we're not going to see that changes at the Fed in terms of the views on inflation, And then we got the AI boom, right? And right now in the AI industry, right, we're seeing people comparing, analysts are comparing the AI boom to the dot-com era. And just like in the dot-com era, you're right now seeing a lot of AI companies basically just investing into themselves through circular deals, creating demand for each other. Basically, they're driving this, what a lot of people are calling the AI bubble. They're driving their own demand up by investing in themselves, and they're investing hundreds of billions of dollars into these infrastructures. And just like in the dot-com era, some companies, they will survive if there's a crash. And some AI companies will also survive if there is a crash. So the AI technology and the promise of AI will live on and potentially change whole society. But if there's a crash, it's going to take the market down into recession before that happening. So that's one of the fears I'm happening, because Bitcoin is not, that's one of the fears I have for happening, because Bitcoin is not, immune to that. Bitcoin will crash just like everything else if that happens. So that's one of the worries I have. But the thing is, this AI run has just started, and I do believe we have quite a lot of time until we start seeing a potential real bubble forming here.
So the key word is that the big thing is the bubble, what everybody's forming to, which is the hardest thing to identify, because when is the bubble big enough to pop? When is that emotional froth in the market ripe for the picking? And I think one thing we can agree upon now is everybody's still too cautious. I don't have that blind faith comments that's popping up with somebody saying it will hit 150 or it will hit 200,000. We've got that scenario where there's a little bit of common sense still in the market. So if you start saying to somebody, this coin will go up 1,000x, I mean, yeah, whatever. So I think that is quite interesting, and makes for an interesting point. So to bring it all down now, your analysis based on what you just said, we're sitting in the Goldilocks zone, and what would be the higher update, or your highest upwards targets short term, let's say for the rest of the year? What are you looking at?
So in terms of targets, it's basically impossible to find a target. But what we can do is we can look at how long did it take for price to move a certain distance in the past. So we can look at when we had the last explosive moves. And I also want to point out that while we had this explosive move back in 2017 and then this one in 2020 during the pandemic, we have not really seen that, even though the conditions for Bitcoin are very, very favorable right now, just like it was back then, and it's most likely going to become better, we are still not seeing that explosive move. So the question is, will that explosive move happen, or has it already happened in the form of a less volatile move? Less volatile move because of the stabilization and the institutionalization of Bitcoin. Now, if we do have an explosive move like this, we can just look at this move right here, where we can see that from the breakout of the lower channel to the top, it took 150 days. And from that one right here, let's say it took about 230 days. So let's look at 200 days. How far can we move from current price 200 days in the future? Looking at this level right here, that is the 13th of April 2026. So that's next summer. Can we perhaps get a move that shoots up like this? And if it happens, you can pretty much see that all of these is a straight line. And if we get that, we could perhaps, if I take this one, This is on the log scale. This is a 250% move. I mean, I have a very hard time thinking that we're going to get a 200% move up here from that one. But as you see, the logarithmic regression, the channel is becoming tighter and tighter.
Yeah, it's pointing
So
to
even
around
if we
250, maybe 260 if I kind of project where it's going to go there. So you're looking at
long term, like
150, yeah.
long-term target, if we get an explosive move to the upside, I would be looking at somewhere between 200 and 250 if I had to give an estimate of that. The very more conservative target is sitting right here at 100, around 150. So 150, I believe, is the conservative target. That's the worst case scenario. And the best case scenario probably sitting around $200 to $250,000 per Bitcoin, unless we enter a super cycle that is not going to stabilize the price of Bitcoin, but actually accelerate the current cycle that we're in right now, which I think is highly unlikely, but possible.
Yeah, I've got that super cycle kind of edge in the back of my mind, when we look at the Dixie, I'll bring up my chart real quick so you can see what I mean there. So if you look at the Dixie on the macro time frame, so this is weekly, and I can actually scale this into a monthly time frame. So we do know that, with Bitcoin, it's always when the Dixie starts pushing upwards, that's normally when your bear happens. And so the Dixie goes up, Bitcoin does bad. The Dixie goes down, Bitcoin does good. So there was Bitcoin's bottom, and this is now where we're at right now. So if we look at the channel long term, Bitcoin has been still stepping up, regardless of the fact that the Dixie was, trending bullish on a larger time frame. But with all the US and the uncertainty with the security of the dollar and everything, what if we find ourselves into another one of these where this is just the beginning of a long-term that? And that then opens the door for that super cycle idea in my mind from a purely technical analysis. Not looking at a fundamental, but just looking at the mechanics on how these charts normally correlate with each other. If we do have that channel and we do have that break, because we're right at that critical point right now, and we start moving below these levels, it could fuel that super cycle idea. What needs to happen fundamentally, I don't know. I don't try and predict into the future, but there is that TA to kind of support the idea for something like that. But as we do on this channel, we take things level by level. We don't try and predict too far ahead of ourselves, because a prediction can get your fingers burnt. Let's have a look at a few questions there, Jonathan. We've got a question from Anant. To save the dollar, do you think that the US can dump their gold in the open market to crash the prices, whereas instructing stablecoin companies to invest in Bitcoin?
No, that's highly unlikely. The dumping gold for the dollar would definitely damage the US credibility and global confidence rather than strengthen the dollar. So no, I mean, dumping the dollar on the market, no, I think that would be more stabilizing to the dollar in the market than doing anything to save the dollar. The dollar doesn't need saving. I mean, dumping the dollar would absolutely crash the dollar. The dollar does not need saving. I mean, the dollar is at like beautiful high time frame support. I'm going to show my the dollar currency index high time frame analysis right here. Now, I am bullish on the dollar, and I'm looking at the dollar. I mean, we're in this channel, right? So we're looking at the 15-year channel. This channel has been created since the financial crisis in 2008. We can see that the US dollar has
drawn just now.
Yeah, so this is the channel where dollar has been created, the major lows historically. Now, this is important in the context of Bitcoin, because Bitcoin was created because of the financial crisis in 2008. If you guys remember, you look at the Bitcoin, the first Genesis block of Bitcoin, block number 1, you have an article in there saying that the UK chancellor is going to bail out the banks, and that's the reason why Bitcoin was created, because you cannot bail anyone out on the Bitcoin blockchain. It's a deflationary currency. You cannot print more Bitcoin. It's mathematically locked at 21 million tokens, and that's the fundamental beauty of Bitcoin. Anyway, so this channel, very, very important for Bitcoin. Now, what we can do is we can actually go up and we can add Bitcoin to this chart. And what you're going to see is something that, now again, remember, this is based on a 4-year cycle. The 4-year cycle, I believe, is dead. So it might not make a lot of sense, but it's still important from a technical point of view, because what we're doing as technical analysis, or as chartists, we're looking at past price action, and based on past price action, trying to predict future price action. So this is Bitcoin right here. Is this Bitcoin? Where is it? Okay, we got the log scale.
Bitcoin, but it's on log.
So let's see. That's the log scale. So if you look at Bitcoin on the logarithmic chart and dollar on the arithmetic chart, you see that whenever the dollar prints a low, this channel kind of like follow each other perfectly. So low on the dollar, top on Bitcoin, low on dollar, top on Bitcoin. Same thing here, same thing here. Will it happen here? I think it's time for this pattern to break. I think the dollar will be moving higher. Bitcoin will also be moving higher. And if it's not moving higher, it's not going to create a top that looks like, we're not going to go down here. We might just start ranging and stabilizing around this area as part of the new 4-year cycle, which means if that's the case, and we do enter a new super cycle, building a long-term base here means potentially a bigger, slingshot to the upside while the dollar starts topping out as well. But I am technically bullish on the dollar. Not sure if I'm very bullish on the dollar, from a fundamental point of view, but I am a technical analyst. I do follow price. Then if we do have a breakout here on the dollar, because I do see that we're potentially in a accumulation phase right here. If we do break out, maybe retest and start moving higher, that's a bottom on price, no matter what fundamentals are telling you. You can have your fundamental reasons for being bearish on the dollar, and you can have that bias all the way to the top, but price doesn't really care what you think. It's just going to keep moving anyway. So I'm looking at that potential break out of that accumulation phase on the dollar. And I believe that's time to be potentially cautious on the equity markets, but not necessarily Bitcoin, because Bitcoin is actually, I believe, some of this rally we're seeing in Bitcoin is being fueled by the same principles that is gold fueling gold. But then if the dollar puts in the bottom here, then what about that debasement trade? So there's a lot of different things to keep your eyes on here that can happen. But I honestly think that following price first, and then verifying price movements with fundamentals is the best and simplest way to prepare for shifts in the markets.
I think what I can add on to that is we've got a rule, you use fundamentals and technical analysis to look for a buy. So Bitcoin, what is the fundamental driving force behind Bitcoin? And then you use technical analysis to say, well, where do we measure the risk? Where do I invalidate whether the good fundamentals is there? Because if you look at the chart, point to any of the previous Bitcoin highs, fundamentally, there was nothing wrong with Bitcoin at those highs. So why the bear market? And that's where technical analysis is a necessary addition to your bags, because you need to have both risk management and the fundamentals behind that, and then take things level by level. Don't get hung up too much on the larger picture of things, in the sense of fitting to a narrative. You want this to happen in order for that to happen. because if something just doesn't quite fit your picture, you might end yourself up, what we said earlier, being outside the market instead of being in the market. Let's have a look at another question. So nicely, really thorough answer there from Jonathan. Well done. So let's have a look at Henry's question, and maybe you can have it. You're talking about what structural shifts, technological, regulatory, or geopolitically, are most likely to redefine the role of cryptocurrencies in the global finance by 2035. That's a very, very good, but a very, very far out there question regarding time scopes. Jonathan, do you have anything you want to add to that?
Yeah, that's a great question. So we can start with the let's keep that comment up, and we can start with the first
part.
Technological. So we have 3-part question: technological, regulatory, and geopolitical. So obviously, looking at global finance in 2035, that's 10 years from now. Looking at it from a geopolitical point of view, that's going to be really, really difficult to think about. Obviously, what's going to happen in geopolitical space in the next 10 years. But if you look at the technological space, obviously that's going to be AI and quantum computing. So in the next 10 years, we have potentially 2 of the biggest technological breakthroughs is most likely going to be AI and quantum computing. So how is that going to affect Bitcoin and cryptocurrencies? And I think AI can really help propel the cryptocurrency market for sure. But quantum computing is another question, because that could potentially be problematic if you have powerful enough AIs working with quantum computing in the next 10 years. If they in some way solve what is it called? The underlying thing that kind of drives the whole blockchain and makes it secure. It's called encryption. That's right. If they start working towards breaking encryption, heavy encryption that most of cryptocurrencies are based on, then we have a very difficult time, as investors in the cryptocurrency space. And that's actually 2 of the biggest worries that I have for cryptocurrencies is if we have powerful enough AIs utilizing quantum computing, how is that going to affect cryptocurrencies? Now, from a regulatory point of view, I only see positives here. You can just look at what Trump is doing right now in the US with the regulatory environment, and we're probably going to see more countries adopting Bitcoin as legal tender and potentially as strategic reserves. We might actually see more regulatory environments improving, hopefully especially in the EU, and more countries adopting things like stable coins and things like that. One thing that I'm worried about from the regulatory point of view is the CBDC, which is the central bank digital currencies. Now, we do not want a central bank digital currencies controlled by the central bank, because then it's just going to be the digital equivalent of fiat dollar. If that takes dominance instead of the cryptocurrency environment, that could potentially be problematic. But from a technological point of view, a little bit worrisome with the technologies that we have right now. From a regulatory point of view, it's just very, very positive. And honestly, from a geopolitical point of view, it's going to be very difficult for me to give an answer on that for the next 10 years.
But
thank you. Yeah.
Is there anything else you want to add to that? Because that was a meaty one.
No, I don't think so. I think that's all on that.
Let's see what else we've got here. We've got a comment from Renee. Which breakout signal do you trust more on Bitcoin versus gold? Volume, RSI, candle structure, or how would you then, and I'll add on to that question, how would you then look or consider a breakout? So because we're sitting at 120 and we're looking at 150, when would you say, or what would need to happen for you to say that this is a breakout? Or how do you normally act on that?
Well, we have to first, let me just go in here. Man, this is just crazy. This is gold. But yeah. Okay, so Interesting question. You had volume, RSI, and price. So you have basically three things: volume, RSI, and price. Let's say three ways of viewing price, or three data sets, but there's only really two types of information. So you have RSI is derived from price, like most other indicators out there. And for me, I always look at price comes first. Price is first. That's the first thing I look at. That's the most important thing I look at. That's the main focus in my technical analysis. Things like RSI, that's something that I look at to try to find divergences between price and RSI. So for example, you have higher highs on price and higher lows on RSI. That's a bearish divergence. But if you're going to be using RSI in the breakout, now RSI obviously needs to be overbought for that breakout, in my opinion, to be valid. If you have RSI oversold on a breakout, chances are it's not a true breakout. Now, what's interesting with volume is that volume is not derived from price. I mean, you have tick volume, and that's technically derived from price, but true volume comes from the actual orders being reported and orders going into the market. So volume is actually, I believe, super important in technical analysis, because that's one thing that you cannot see and cannot find in price. So how do we confirm a breakout? There's multiple steps of confirming a breakout, depending on what type of trader you are and what tools you're using. The most and the best way of confirming a breakout, in my opinion, is just candle closing above a certain level. If a candle is closing above a certain level, that's the first sign of a breakout. Personally, preferably, I want to see a candle opening and closing above a level to be a confirmed breakout. Now, if you're looking at the daily, that means the gold breakout is confirmed right here, because you have one candle closing above the level, which means another candle is opening above the level. And then you have that candle closing above the level. You now have an open and close above a level. That is confirmed. How can we now utilize volume to confirm this breakout? Now, of course, this is looking at gold on a not on the futures market. So this is not a centralized exchange, which means we're looking at tick volume. But the research I've done shows that volume on timeframes of the 1 hour and higher is about 97% accurate to centralized reported volume. So what you want to see in volume is you want to see, we can actually look at a couple of examples here. Let me put a circle here. We can put a circle here, and we can do a little bit of replay. So we have price coming up and testing that highs right here. And people are looking at this and thinking, do we have a proper breakout on that wick? Because you see price actually breaks out right here. You look at volume and you see volume is declining. Volume is not confirming price. So we got the next retest right here. We got a, well, let's say that's a breakout, right? And we look at volume. Volume is not really confirming price. That spike is lower than that one. So now we'll look at the true volume, okay? The true breakout. So we got the breakout right here. Now look at volume, what's happening on this breakout. Now what we're seeing is price comes down, hits the bottom right here, and volume spikes up. Here you have declining volume throughout the whole range and no real spike. Get a big selling volume here. Volume is picking up on the breakout. And if you look at where the breakout was confirmed, which is on that one right there, you have an increase in volume on this move to the upside. Going down to the 4 hour, you see volume again picking up on the move higher. So you have an uptick in volume, an uptrend in price. Volume is confirming price, and that confirms it for me. If you want to add RSI to this, just add the this is relative. You add the RSI. Look at RSI right here on the daily. You see that RSI is higher than any other tests, which is a good thing. You want RSI to be overbought on a breakout. You want RSI to be overbought in in a high momentum market. Selling an overbought RSI is will lose you money, but buying when the RSI is overbought in an uptrend is it's a pretty good way of following the trend. So yeah, that's a quick rundown of how I custom breakouts.
I like that. I really like that, and I like the way that you put the volume into perspective for Renee. So I hope that answers your question, Renee. Well, it does answer the question. I hope it answers it to your satisfaction. But for me, I think it was really well done there, Jonathan. Thanks so much. Let's quickly wrap this up, because I think we're running out of time now.
Yeah, we're already an hour. This was great. I would love to do this again. I heard you.
I'll bring you back. I'll bring you back.
Yeah,
if you want to do this again, everybody, give me a 999 in the comment section, because I want you back. Because definitely this was informative and fun, and I would want to do this more often with you, Jonathan. It was really fun having you here. Just real quick. What was it? Not this one. Charts, no camera. There we go. My BTC long is currently sitting around $2,800. So not only did we learn, we've also earned in this time. So this has been a really good, profitable hour. And as always, guys, when you start getting into a move like this, move your stop to break even. Then this becomes a risk-free trade. So yeah, we were sitting around here, 121,000 when we started. So this is moving on nicely, and my expectation is that we're going to pull this off. Probably going to get to 123, although my TPs, I am a greedy bugger, is already set at 135. So fingers crossed, hopefully this one does play out like that. Now, I think, let's do this. Back to you, Jonathan. Renee, everybody's throwing some proper love your way. A lot of 999s. LJ, nice to have you on the stream as well. LJ said, who was it that said, isn't 125 enough? We're greedy buggers. It's trading. We're just trying to see how the market's going to move. And if it wants to go up, why not capitalize on that? But as you guys know, my bull market prediction top from 15,000 was 125, and that's where I started selling all my spot. And I'm going to stick to that. So hopefully this comment doesn't age badly, and I'll sit here in 2 months crying. But you know, you have to stick to your game plan. Never move the goalpost. And remember, guys, it's not financial advice. It's just two traders talking, sharing their thoughts with you guys. And that's it. So do your own research. It is your money. It's your risk. It's your reward in the end of the day. So remember that. Jonathan, as we discussed, we wanted to give away 3 vouchers, but there was some issues regarding my logic, because you were supposed to pick them, and I wanted them to be the guys in the Discord, so that it makes it nice and easy for me to check the UID so that they are valid accounts. But in that regard, it didn't quite play out that nice.
I think what me picking comments here is going to be difficult to confirm and validate the winners. So I obviously think you doing the giveaway here in your Discord, and you taking care of that is obviously the most reliable way of doing it. So we can definitely pick the best questions we have here, but then you'll have to confirm that they're the right people reaching out to you. And we know that through YouTube and here, it's very difficult to confirm that it's the actual right people. So
let's simplify this. Maybe for today. So I apologize, maybe, but I would say I know, and the other part is, how do I link a YouTube username with a Discord name? So it becomes really hard. So what I do know is we've got Crypto Macy. She asked a really good question, regarding, and that Crypto Macy is Renee. So I know her from my group. So I'm going to pick her as a winner for today on my end, and say that. So that's the Discord picking, and then I'm going to ask you, Jonathan, to go through the comments. Can you see the comments?
Yes, I can see the comments. Okay, so what? Okay,
go through the comments. Give us 2 winners.
Okay, let's see. So I think two questions. I think this Anant Gupta.
Anant Gupta.
Yeah, he definitely had a couple of good questions right here, and then I think definitely. I mean, I do think Henry had a really good question. So
yes, I mean, you don't have to. A good question's a good question. Henry, you had a good question. I agree with you there. So the only way that I would say that easiest for us to reach out to you so you can claim it is head over to the Discord. It doesn't. The link's in the video description. Then go over to the landing page. You just verify, and then you'll have the landing page. Click on the Prime XBT giveaway. You two guys, Henry and Anant. And then click on the enter here. It's just a one-on-one ticket, nothing to it. It's going to give you your username there. And all you need to do is just reach out so that we can have can give you the coupon. It's as simple as that. There you have it. Thanks so much for being here, Jonathan. I really enjoyed this today. And
yeah.
I'm gonna see if I can get you back to next week. Huh? What do you guys think? Should we try? I don't know. I'm putting him on the spot. Let's
definitely. No, I would love to come on. I saw your dollar currency index chart. You have another channel. I have a bullish channel. You have a bearish channel. So I would love to kind of pick your brains on that, because my view is slightly bullish on the dollar. But if we would have a bearish scenario for the dollar, that would fit my narrative much better. So I'm trying not to, marry the bias, but definitely interesting. I would love to come on and discuss that.
So we'll schedule it in the back door, in the back end, and we'll make that happen for you guys. This was a really informative stream. I really enjoyed this. I will obviously, guys, cut this up into smaller sections, send it out to you guys, and so forth. But make sure to go follow everybody on the stream. Links in the video description. And while this is not going to be your last time on this show, maybe give me a strong closing remark there so we can end this off.
All right, strong closing remark.
Remember now, boom or bust. October. What does October have in store for traders? Give us your closing remarks.
Right. So I think we're definitely in a bull market. I see we're definitely in the bull market. I see an extension of this bull market. I think we have the equity markets being fueled by the AI rally, which is most likely going to be continuing for quite some time. That's spilling over into crypto market. It's going to fuel Bitcoin most likely. We have sticky inflation, and that's combination with geopolitical is fueling gold. And I think the reason for gold to rally will also spill over into Bitcoin. So all in all, at least in the next 6 months, I think we're going to see some really explosive movements to the upside in Bitcoin, and with that also altcoins.
There you have it, guys. Thanks so much, Jonathan. Thanks so much for everybody for joining in live. 525 viewers. Make sure to hit the like, hit the retweet button or the share button regarding whether you're on Twitter. Sometimes the Twitter comments doesn't come through. It is frustrating. There's a Twitter comment from Isan Ula saying, yes, it can touch 150. So I'm rooting for that as well, irrespective whether I am I'm selling my spot. I'm also using my spot at this stage to start looking for nice new coin opportunities. And those opportunities I do share in the research room, guys. So you can go and have a look at that. It's in the Discord, so you can check it out. It's completely free. There's no strings attached to it. Just go and have a look at it. It's just alpha. You can decide for yourself. There you have it. Jonathan, thanks so much. Let's end off the stream right here. Quit while you're ahead, as they would say. I'm going to take my trade, and I am going to just secure my stop, make sure that this is all sorted, and then hopefully this breakout can take us to 2123. I will be trading live in Twitter Spaces with you guys later on during the day, as I do every day. as well as trading live in the Discord. And Jonathan, if you want to, you're always more than welcome to come and join there as well. I'll send you some links. It's just chill. We just trade. Okay, it's nothing too crazy. Okay, there you have it. Have a lovely day, guys. Let's end it off. Cheers.
Take care. Bye.